Mortgage demand just hit its summer slump. It was confirmed. Let's talk about it. My name's Evan Kaufman, your loan originator, here to give you an August update. We're going to go over three major things that we're seeing in the market right now that are moving interest rates and just plain interesting in real estate as it is. Number one, we're going to talk about Fed Chairman Powell and trying to be fired by President Trump. Number two, we'll talk on the summer lull, that how it was confirmed. Talked about it in some other videos, but mortgage application data came out to show, hey, mortgage applications, sure enough, have slowed down in July. And then lastly, we'll look at Opendoor meme stocks. This is an interesting one and a little twist on a unique event. If you know about the GameStop meme stocks back in 2020, 2021, it's happened in real estate. So let's talk about the first one. Jerome Powell, our Fed chairman, trying to be fired by President Trump. Something that has been insinuated almost in the news for the last couple months has been that the president has been working to try to make it so that Jerome Powell will lower interest rates. There have been a lot of open pushes to try to get the Federal Reserve Chairman to lower interest rates, when ironically he can't quite do that by himself, but there have been a lot of requests from the White House to say, hey, we need to lower interest rates. Look what's happening in the market. We need to lower interest rates. And not all of that is necessarily too crazy of an assertion. A lot of economic data has been coming in mixed, but a lot of strong economic data still, which means that, hey, you could lower them, you could keep them the same, and I think you kind of be in the same boat. And a lot of countries have actually pulled back their Fed funds rate. So I think that the president and the White House is going off, look at what everyone else is doing, we should be following the same. True, maybe, maybe not. The thing is, economic data has been relatively strong. There have been some weak points, but overall it's been relatively strong, so I can get where that push and shove can come. However, more recently, there have been just outward cries for firing Fed Chairman Powell, which would be very unique. Not necessarily fully unheard of, but relatively unheard of in our era to have a president say, hey, we're going to fire a Fed Reserve Chairman. Now, what does that mean for mortgage rates? It's meant more uncertainty. And what does uncertainty do? It oddly has the unintended consequence of raising mortgage rates. When people who buy up U.S. Treasuries, and that's what drives heavily the mortgage market, get spooked out, they end up demanding a higher return on their treasury yield, meaning that most folks that are, say, big investors, foreign or domestic, are buying up 10-year treasury bonds, which investors or mortgage companies, lenders like us and others, will use to hedge their mortgage bets. So ultimately, if investors are like, hey, I'm more uncertain about the U.S. economy right now, I need a higher return on my yield. So in turn, that ends up raising interest rates. And that's what we're seeing right now. Even if the Fed Reserve lowered the Fed funds rate, sometimes it helps lower interest rates. I should say most of the time it does via the 10-year treasury. But when there's a lot of uncertainty, you could lower the Fed funds rate and oddly still raise interest rates. And we're seeing that right now with this threat of just creating a lot of instability with the Fed Reserve Chairman and what could or might not happen. So this whole fire, not fire deal is just causing some more uncertainty, and it's oddly making interest rates higher relative than the goal of lowering them. Now, number two, we're going to talk on the summer lull and how it was confirmed. So sure enough, in July, we did have some of the largest drops in mortgage applications. I'd mentioned a few videos back that, hey, we typically see this summer lull where things just kind of slow down. It's usually right before 4th of July. It's kind of almost like the Christmas, midway through the year, people kind of take a break from looking, fewer applications, things slow down. And we did see that. Sure enough, the data now that comes out, it's lagging, is down, as well as we see some inventory data expanding. For example, home builders have some of the highest inventory they've had in a long time, almost 10 months, like 9.8 months was a recent survey that I saw. That's a lot of inventory for new build construction, considering that just a couple years ago, it was a third of that or less. So now we see the supply increasing quite a bit. So we've hit that lull. That might mean there's some good deals if you're still looking to purchase right now. Lastly, let's talk number three on the Opendoor meme stocks. If you remember the old adage of GameStop meme stocks, and to the moon, GameStop going off the high end because people just literally ran it up. People would go online on blogs, on Reddit, and post, hey, GameStop, what a great place. We need to buy it. Let's drive it up. Let's crush all those Wall Streeters by buying GameStop and squeezing the shorts or whatnot. It's happening in real estate. So Opendoor, a unique stock from back in the day that was what's called an iBuyer, meaning they bought homes, not automatically necessarily, but like with the click of a button, they went off the algorithms, what they value a home, they buy your home for cash, turn around and sell it again. It almost went bankrupt, but it still stayed around and recently has become the attention of meme stocks. So the price shot up a few weeks ago and then ironically came crashing back down because the underlying fundamentals didn't change at all. That's just a fun, unique, random story in the real estate industry that we just never really expected to see. A meme stock for a real estate related company. Something we just don't see very often. Well, that's our August update. My name is Evan Kaufman, again, your loan originator, here to help you through. As we go into August, I think we'll get a better picture of what the last half of the year is going to be, and we'll give you some updates then. Thanks for watching. Bye.